1,000. That is the lowest level since April. Meanwhile, the U.S. economy grew slightly faster than expected in the second quarter at 1.3%. So is the economy better than we think? Joining us now is Beth Ann Bovino, a senior economist at Standard & Poor's. We also have Lance Roberts, chief economist at Street Talk Advisors. Thanks to both of you for joining us. Lance, let me start with you. I understand we can discount that employment number for a number of reasons that we heard after the fact, but the GDP number is stronger than expected, don't you think? What does it tell you?
Well, not a lot. The first estimate that comes out from the Bureau of Economic Analysis for GDP is basically just a guess. A lot of the data that's needed to actually pin down the actual number, we won't start seeing that really until the second revision and then the final revision in the third. So the first estimate's really tied to a lot of the analyst estimates around the country. So it comes in generally fairly close to that, and it did. That was the average analyst estimate was coming in about 1.2 to 1.4, so it's not surprising it came at 1.3.
Beth Ann, do you not trust these numbers?
Well, I mean, that's all we got, so we got to trust them. And in terms of the 1.3% reading, it's pretty much what I expected. The positive news in there is that private demand was up. There were a lot of upward revisions in those readings, and that was something that I saw as a boost for growth.
Lance, what is your forecast for the fourth quarter, and what do you think 2012 is going to look like economically in the U.S.?
Well, I think we're going to continue to see some real economic weakness going forward. Obviously, the country has a lot of challenges, primarily on the consumption end. You know, we're not in a normal economic post-World War II business cycle recession. We're in a balance sheet recession for the first time since the Great Depression, and that's a totally different animal that we're having to deal with because it saps the ability for consumers to spend. Housing depression, high unemployment levels, that all really weighs on the consumer. You're looking at all the regional manufacturing indexes all coming in recessionary territories now, so very likely we're going to continue to see a weak economic environment through the rest of this year, and any potential shock out of Europe could very well put us into a recession by next year.
Beth Ann, I know you expect a half-speed recovery. What does that mean?
Well, I mean, it's certainly the numbers that I'm looking at and what I'm forecasting is that we're looking at basically 1.6% growth for 2011, not much better in 2012. That's subpar. That's a subpar recovery. You'd like to see something closer to, 2.5% just to keep up. And it's certainly not going to make a dent on unemployment. I'm not expecting unemployment to come down below 8% through 2013.
Exactly. Lance, talk to me about the fiscal position of the United States and whether, as we contract and we try to cut spending and as governments try to cut spending, whether it's the federal or the states or localities, that is going to have a downward pressure on the economy. And then in 2013, there are tax increases on the way unless the so-called Bush tax cuts are extended. At what point do we ever return to more sort of historic growth rates in the 3% neighborhood?
Well, and that is the beautiful input of all this, and that's a great way to put it. When you look at the potential pressures from austerity measures, trying to implement austerity measures in a very weak economic environment with high unemployment only exacerbates the problem. We should have been doing austerity measures, cutting spending, etc., when the economy was really strong and we had very low unemployment levels, because that's when you can get away with it. The problem is now is that everything we do from here, look at Greece, they're facing exactly the same thing here. They're trying to cut austerity measures, which lowers their economic growth in general, which impedes their ability to pay their debt. We're looking at exactly the same situation here by trying to cut spending now. This is really the wrong time to do it.
Beth Ann, thank you very much. Lance, we appreciate it. Enjoyed having you with us. And when we come back, stocks driving higher today, the Dow Jones Transport Index, the worst